Hello there, guys. We give it a couple of minutes as usual. Let everyone have an opportunity to jump in. We'll be taking a little look at pound yen today. Quite like pound yen. We're going to have a little look at sort of the technicals on this market. Some other opportunities as well, I feel. A bit of a weird week so far. We've had obviously the dollar weakened quite significantly last week, and now we're kind of seeing a little bit of a turn to that. So is it a bit of a false break to the downside, or are we getting a continuation of that dollar weakness? That's going to be something we really focus on. Good afternoon, Marco. Hope you're doing really well. Thank you for joining me today. So yeah, as always, guys, if you're new, hit that subscribe button. If you have any charts that you're looking at the moment that you want to see have a little breakdown from my point of view, then pop that in the chat box. But yeah, let me just change the view then. Let's have a little look at what's going on. So let's take a look at some of the data that's been dropping recently. So from Monday, really, we've had quite a bit of interesting data. Obviously, we had some Bank of Japan data. We've had quite a bit of China data, actually, coming out recently. And we do have upcoming China CPI, which is going to be really important. We also have had the RBA interest rate decision. So they increased interest rates from 4.1% to 4.35%. So we've had that going on. And for the rest of the day, there's not too much out of high impact data. FOMC member Waller is speaking at 3 p.m. So there's a little bit of potential US dollar. But what going into Wednesday would be quite interesting. We've got inflation expectations out of New Zealand, Bank of England governor speaking, as well as Fed Chair Powell speaking. So yeah, definitely some interesting developments coming up tomorrow. Let's go check out some of those charts of interest then, and why am I looking into certain markets. So pound yen, I think, is something that I quite like the look of at this current moment in time. We're obviously seeing the yen continue to sort of weaken at this current moment. I just want to have a little look if I can bring in the strength meter. So although the yen here is not really kind of highlighting that weakness in the market, we know that it's generally weak. We can see that across the board. So really speaking, looking to see if the currencies here that have continued to sort of get stronger, can they sort of benefit against that weakness? And pound is definitely one of those which I feel has gained some strength. The Australian dollar is another one that gained strength last week, but going into this week that has faded now, and so I'm not particularly looking at the Australian dollar as a bullish market anymore. Dollar obviously was one of the biggest losers last week. That has not generally filtered into this week either, so we're going to have to take a look at that one as well. But generally speaking, I like the idea of pound. To be honest, pound Oz could be something we look into, and potentially pound Kiwi as well. So let's go take a look at sort of pound yen. What am I looking at here? Well, if we just go up to the weekly chart first, we're just going to keep things super simple. Last week we had a really nice bullish close, and we're very, very close into these kind of previous weekly swing highs. If we go to the daily time frame and zoom out a little bit, we can refine those weekly highs into this high that formed back in August around about the 186 spot 50 handle. So I quite like the idea of pound yen reaching this zone up here, where we may see obviously a bit of bearishness take over at that point. But I do quite like the idea of looking for opportunities into that level. We had some interesting developments. Obviously, we consolidated down in this zone last month, and towards the end of last month, we actually breached this high, which was around about the 183 spot 60, 183, spot 70. So we'll just pop in a little line in here. You can see around about that 183 spot 60 handle, we drove through that and closed above. So it was about watching the reaction after that point. And although we kind of closed back within that range, there wasn't much in terms of that sort of selling pressure. We didn't see those buyers sort of give up here. Instead, we had a bit of a sort of bullish candlestick, and then the day after we've rallied. So I really tried to see if I can kind of look for any kind of opportunities into this sort of move. At the moment, we're getting a really strong sort of bullish 4-hour candlestick forming, and that's kind of forming around this previous sort of close here of last week. So that's quite interesting to see. To be honest, I'd be looking for a little bit something going on through here now. I would like to see a little bit more of a sort of breakout forming here. I've got this trend line sort of resistance going on, and I do like to use counter trend lines sometimes. They can be very useful when watching things going from sort of the sort of a non-trending condition back into a trending condition. So for an example of that, for down here, we can see that price was moving against the overall trend. So the overall trend was bullish, but price was going against that. It was making lower highs and lower lows. You can see then we transition with a breakout of that counter trend line, and we can see that price rallied to the upside. So I've got another one going on here right now, because what we may see is the market do something like this, push into there, another move down, and then a breach of that trend line. I think I'm watching now just to see if we get a breach of that trend line, which then could obviously help transition up into that level of resistance. The only difference between obviously here and here is where price is currently at. So it was less aggressive to probably get along in around this point, because we had sort of a large distance between that current price and where the resistance is. That has now been sort of halved essentially. So if I was just to grab the crosshair here and measure down to that breakout, you had 300 pips to sort of work with. If we had a breakout now, we only have around about 90 or so pips to work with. So the risk reward ratio has dropped dramatically. The only one thing we can obviously do to try and kind of get around that is by going down to lower time frames. So you've got the 30-minute time frame in here. You could even look and access the 15-minute time frame. I think if we were to get a lower high, a higher low and then a new higher high, then obviously there's potential around there to then kind of look for something around that point. That's the only way I can see you trying to boost that sort of risk reward profile at the moment on pound yen. Afternoon, Bongo. Hope you're doing well. So yeah, that's what I'm kind of envisioning in my head here at the moment for pound yen. I do quite like the area that we are at. If I was to just go back to that 4-hour time frame, and I don't know if my fibs are set up correctly. Yeah, they are. Here we go. So fibs, if I was to go from sort of the swing high down towards this swing low, I draw my fibs backwards, so don't worry too much about that. But you can see the 61.8 there. If I was to reverse that, you'll see that the 38.2 is at the exact same level. If I just pop that back down into that low there, you can see the 38.2 in that exact same level. The only reason I draw my fibs backwards is so that I get the extension levels that are positive. It's just a thing I see in my head. So yeah, but the distance from the 38.2 and 0 and the 61.8 and 100 are exactly the same. So it doesn't really matter which way you draw your fib. So you've got that sort of confluence there. To just kind of add further confluence, if you were to draw a trend line from this low and anchor it to where that end of that fib is, just onto this low that formed back on the 2nd of November, and then that expanded out, you can see that it also connects in and around that zone. So you've got multiple confluences at this sort of 38.2 or 61.8 level on your fib, and you've got that sort of trend line support as well. So multiple confluences there. That's why I think maybe we're going to see a little bit of bullishness coming out of that sort of point. if it's going to be aggressive, it will try and take this high. If it does, then, you know, I think that's a good point to then start looking for some opportunities. If you do get a pullback, then maybe something around this low could then give you a bit more of a sort of risk reward play as well. What was that, Bongo? Sorry, let me just see that message. Good thing you explained the fib story. I was beginning to think you're a little weird. Yeah. I've always drawn my fibs backwards. It was something that when I first started trading, it's something I was taught, and it's just something I've always kind of stuck with. So I don't use fibs too much in my trading anymore. I used to rely on them very heavily. I look more just for sort of, you know, key supply and demand zones now. I think you can know a lot about a market just by highlighting areas of turning points and whatnot. So that's all I really focus on now. But yeah, that's pound yen. So I like pound yen. Let's go check out the US dollar index. Obviously, huge sort of downside coming in on Friday. That was this candlestick in here. And that downside was brought on by those sort of poor NFP numbers. And the poor NFP numbers sort of support the fact that the Federal Reserve are going to continue to pause those interest rates and hold those interest rates, rather than we kind of expected another jump, maybe even it was only going to be sort of 10 basis points or whatever. We were expecting that. And the market has then, or the data has gone against those expectations. So that's why we've seen that sort of downward move. Quite interestingly, because of that, though, we've come into another area of support, which was around about the 105 handle, which was this low that formed back towards the 20th of September. Now, price has obviously found some support here. We're seeing some bullishness. Now, what's quite interesting is we've obviously had this consolidation here, and price has breached to the downside. Now, I always say you've got to watch what happens after the sort of breakout. I think it's easy for traders to try and get short here now, thinking that that is the dollar that's turned bearish and that we're expecting that downside now. But if we close back within this range, it could very easily head back to the highs around about the 107.25, or even head for that 108 level that we've been talking about for so long. And the reason I say that is because there are multiple examples across the markets where you have a market in sort of a tight trading range. It will breach to the one side. Lots of influence then in the sort of retail space would be, okay, this is breached a range high, we can expect a continuation, and then quite often price will do something like this, and you know, everyone's stops will be around that low there, and then we'll get quite an aggressive move through that side. Is that going to be a similar situation here with the US dollar, or is this going to be a genuine breakout? I think the sort of truth in that will lie in this sort of potential weekly chart. A huge bearish engulfing candle last week. You know, price action suggests that if we've got a huge bearish engulfing candle, that the momentum's to the downside. But if we kind of close, let's say, sort of back above this bearish candlestick sort of midpoint, I would say that that is more likely that then the US dollar index could continue to move higher. Now, we did do some seasonal analysis recently where we kind of pointed out the, let me just put a couple of levels in here as well. We kind of pointed out the fact that the US dollar can be quite bullish until the end of, or mid-November to the end of November. So we are coming up to a potential bearish period. So let me actually just go see if I've got that still saved, and we can kind of look over that together. So basically there's this website here called Equity Clock. Equity Clock is just a free seasonal thing. I'll put it in the chat box below. So if you do want to look for seasonal patterns, but you don't have access to a paid service, this is a good sort of second choice. So you can come to Equity Clock, go to that website that I've just popped into the chat box. And what you can do is you can look at different things. You've got indices in here. You've got commodity futures. So if you are a commodity trader, you could look at those. Index futures as well, so the S&P, and this is where the US dollar index is. And what we've got is a US dollar index futures seasonal chart. And this is where we kind of got our information from before. So let me just change the color of the pen here so we can see it. So this is what we were talking about. We were talking about the October sort of low in the market, and then through towards the sort of mid to end November, you can see that we get a peak, and then the US dollar usually does decline for the rest of the year. Now, this is a 20-year time range here. So this is the average of what happens over a 20-year period. We've also got the date of that up to 2022. So we know that that is an up-to-date chart. Okay, so really speaking, there is a potential for the market to start topping out, and this is where it's key to kind of look at how this reflects to current price. Now, like I said, current price at the moment is showing that we are getting a little bit of a bearish move forming here. We just need to know if this is sustained or not. Otherwise, that 107 could be quite important coming up, because what it means is if we did, let's say, close back above 105.50 and we do kind of rally up into the 107 area again, this could be the big turning point for that sort of seasonal downward play. Okay, so that's something to also consider as well. And it's kind of like the analysis we did last week, where we were looking at this 107.25 and we were looking to see how price reacted from that. We had a bearish reaction, price has moved lower. We're now back at an area of support. How's that going to be reflected in the price? What are buyers and sellers going to be doing? We've also breached this trend line support, which is something we had placed in a while back. Obviously, I've removed it since because that is no longer valid because of this range that developed. So there is that. But I'll just be a little bit cautious here. There is still a slight possibility that this dollar strength can, potentially continue. I'll be interested to see how it affects at sort of higher prices. You can see on this 4-hour chart, for instance, that the market has kind of rolled over, pulled back slightly, then aggressively moved. I wonder if we'll come and kind of test that sort of NFP high. And if we do, how does the market react around that sort of NFP level? It's very common in the markets where we get large sort of news events push the market in a particular direction. Then the following week, we can see price trying to retrace that. So it's not uncommon to see that. So maybe anything around this sort of 106 level down through here could be of interest as well for people looking to kind of see if that dollar weakness will continue or not. So we'll keep an eye on that one. That being said, it's kind of looking across the board of how the dollar could play out. Now, I did do a video on pound US dollar yesterday, looking to see how the market could be affected by that dollar weakness. Now, I was expecting that if we were to get a secondary close above this swing high, that we could look for the push into one spot 25.50. That's looking less likely now because of the sort of price action that we're getting here at the moment. Is that a false breakout? Has this essentially just been a little bit of a false breakout to try and, push in another order to see the US dollar strengthen and see price come back to sort of 121, 1.2050? That's the kind of thing I'm looking into at this current moment in time. Again, I think it would depend how we kind of finish this week. Are we seeing just a little bit of a pullback for the continuation, or are we going to see price continue higher? Now, continue lower, sorry. But one thing we can do, obviously, is just the best thing about trading is we can wait for those technical setups to sort of form for us. So we don't have to rush into anything here. What we can do is we can just wait on that daily chart, because if, let's say, tomorrow we kind of come to the downside, we've got Bank of England Governor Bailey speaking, obviously. So if we come to the sort of move and we hit this high, let's say around about the 122.50, and we reject and we close sort of bullish with a little bit of like a bullish pink candle, then that's painting a different story. It's telling us that buyers are happy to get involved here and that there could be a move to come still. Now, one thing I would say about cable is that we've got obviously the Bank of England at the moment looking to keep rates higher for longer as well. Inflation in the UK is still quite high, so they're not really looking to bring rates down just yet. Instead, if you got the opposite with sort of the ECB potentially looking to cut rates now. whereas the UK aren't necessarily looking to do that just yet. So the pound could become a little bit stronger because of that. We've also then got the dollar. Like I said, they're happy to just leave rates as is, and they're not looking to hike further. So, and they're not under as much inflationary pressure as the UK. So that could be another reason why we see pound US dollar trade a little bit to the upside. So although there might not be nothing necessarily in here right now, I would be closely watching sort of the daily chart, see how the daily chart closes, and then, because essentially what we want to see, if you want to be long in the market, you want to be looking for bullish daily closes, because that's what propels the market to the upside. Don't really want to be looking for to trade long on a sort of bearish move right now. That wouldn't be a sensible thing to do. You want to see how price reacts. So we do have this level, like I said, down in here, one spot 22 sort of 48, one spot 22.50. Just put a little sort of marker on that. And that level down in there would definitely be something where buyers may want to consider sort of stepping back in. Let's go check out some other charts. Let's go have a little look at how gold's performing recently. We are starting to see a little bit of downside on gold. Again, I did a video a while back saying that, is this the sort of end to the sort of gold bull run at the moment? Obviously, we were having a little bit of a battle with the sort of the pressures of the US dollar, and I think that was what was kind of giving gold that little bit of a bullish move. I haven't actually looked at the commitment of traders report this week. I don't know whether it's showing much buying. To be honest, the last time we looked at it, it didn't really give us too much to go off of. Let me just have a quick look here, see if we can get some commitment of trader data coming up, and then we can have a little look. Say cut reports. Let's have a look here. Let's go to gold. So let me just bring this down so you can see as well. Right, we don't need the disaggregated, we want the legacy. So we are seeing obviously buying coming in from the non-commercials. They are trend followers. We're not seeing those sort of longs coming in from the commercials anymore. We were seeing quite heavy longs coming into this $1,800 level, but they're starting to sort of sell those positions now, obviously, because as gold prices rise, they want to profit from that. So they're going to be selling as gold prices move higher. But what it does paint a picture of really is that, do they think that it's a sort of price where they also want to continue to sort of buy a little bit? You know, if we look down through here, as price was sort of declining slightly, you can see that we kind of bottomed out with price, and then as it fell more aggressively, that's when they got aggressive with buying as well. We're not really seeing that just yet. We're still seeing a little bit of selling coming in at this current moment in time. So I do think, although gold could breach $2,000 and possibly move a little bit higher, we will sort of I would like to see sort of a little bit more aggressive buying coming back in from the commercials. You're always going to see the non-commercials follow price, because they are essentially investors. So if gold prices is moving higher or trending higher, they're going to be buying more. So there is, we can obviously see there's a potential there as well. With the commitment of trader reports, I like to see sort of turning points. I like to see extremes. I always kind of said when doing these that you need to look at when price comes into an extreme more than anything. So for the commercials down through here, I can see that there's obviously an extreme level that came into the market on March sort of 22, and then obviously that kind of price followed. If we are towards these 2000s or 2000 sort of $50 area, and you can see that the selling pressure is near of what it was of March 22, then you're going to use that information a little bit differently. You're going to think, well, okay, we're at these kind of key swing highs. We're getting aggressive selling now coming from the commercials. That means that they're happy to just unload sort of loads of their product. And then obviously we can get a little bit of a turning point. It's almost, supply demand essentially, right? So that's what I would be looking for here. Obviously, the buy-in hasn't reached sort of too much extremes. You can see the extreme in here as well. Obviously, if price falls, they're going to be buying a little bit more, aren't they? So if we do see, let's say, a run down to $1,800 again, I kind of doubt that's going to happen. But if we did, then the buying could come up to that extreme, and then you could look to be a buyer essentially. That's how I use sort of cut analysis. So there's not, I would say, too much to tell here just yet. I would say that if anything, we're just probably getting a little bit of a pullback. We also have to put into the dynamic of it, what is the US dollar going to do? Is the dollar going to remain strong? If it does, where's the price going to come down to? Now, there are quite a few levels on gold which are interesting. Obviously, we have rallied from this $1,800 area. We've breached multiple highs at the moment, so we can look back at those highs and see, is that an area where price could kind of come back into? So if we go to the daily chart, what I'm going to do is just apply a few levels. So I can see we've got a couple of questions. I will get around to those in a second. GJ, yeah, we've talked about GJ already. I will try and cover it again in a moment. But thank you for the question. Wish to see your analysis every time you live. Thank you. We do lives every Tuesday and Thursday, so you're more than welcome to join us there. If you want to react, see the replay of this, it is uploaded onto YouTube. You just got to hit that live tab. So if you are interested in seeing those, but yeah, essentially 2063, $2,050 area is where I'm kind of interested in price. If we kind of look at where price could go to right now, we're kind of approaching that sort of support zone, aren't we? This was where buying has took place previously. Let me zoom right into that so you can see that. You can see here we've got this kind of wick to the downside, and then we rally from sort of that $1,956 area up into that $2,000 area. So we are in that area now. So this is where I would be interested in, again, just kind of refining that level. Can we go down and have a little look at sort of where those buyers came in the past? Just like to refine it. So it's this low here that formed on the 24th of October, that low in there. You can see price has come back into that point now. So this is, again, an area where I'd be saying to myself, what's going to happen next? Because if buyers are going to get involved, this is a likely area they could get involved, because buyers have been here before, right? So this is where we can start looking for those kind of reversal patterns. If we breach this level, it's about looking for the next level of support to potentially come into play, or we have to change our bias at that point. Now, what I would say is the daily is obviously bearish at the moment. The weekly is a little bit bearish at the moment, so we do have to consider those bearish moves. I'm just going to put in a zone as well around that former weekly high, which is not too far away from this 4-hour level, but this is what I'd be looking for now. Hourly, we're obviously seeing some buyers stepping in here. 30-minute time frame, we're seeing some buyers stepping in, right? You can see that aggression coming in here at the moment. These are all good signs. These are what you want to see if you want to look for price to start turning around. Now, there's one or two things I like to look for. I want to either look for a secondary retest of these lows down through here, or at least this area down through there. I like to look for the double bottom pattern, okay? Or I want to see some kind of change in trend. I want to see like inverse head and shoulders. I want to see a higher low come out of it. Anything to suggest that there could be some change in the dynamics down at this level on a lower time frame is what we could look for next, okay? So seeing lots of aggression coming in here at the moment. Hourly's getting bought up. It is coming to 2 p.m. as well. So we've got that cash open. So that area there is looking quite intriguing at the moment. So I would be watching this one. If you don't like trading this type of time frame, you could just wait for the higher time frame. Again, how does the daily chart close? How does the daily chart then perform? And then you can look at something like that as well. So yeah, that's gold in a nutshell there. Although the commercials are selling at the moment, doesn't necessarily mean that they're at a point of extreme yet, which means price could technically trend higher. And if it does, that 2050 level could be something to watch out for in the near future. So yeah, that's gold. Let's go swing by pound yen again then. So just to kind of cover what we kind of covered earlier, pound yen was something we like the look of. The weekly chart is bullish. We've traded above this 183.60 handle. Daily candles are bullish as well, which is usually a good sign. I like the idea of price coming up to 186.50 as well. So what we were looking at was essentially this hourly chart here. We can see that the averages are in favor. We've got trend line support running through. All I want to see now is, can price breach this resistance trend line? Okay, once that's breached, it may open the door to those buyers coming back into the market. That's what something I'm looking for right now. Can we see price breach that level, and can we see price sort of trade to the upside there? Okay. We've been going for about 30 minutes, guys. I think that's all I really wanted to cover today, to be honest. Pound yen was something that I really like the look of. Obviously, cable we've discussed as well as the US dollar index. We've also covered gold here. The VIX is quite interesting as well. We're obviously seeing a decline in the VIX. That can also help fuel a little bit of yen weakness in the market as well. So that's exactly what we kind of want to be seeing here at this current moment in time. You know, the VIX was kind of trending down for quite some time, and then it came towards that sort of 1350 level. I still feel like there could be some potential to see the VIX down in sort of this area, okay, which would obviously be quite bearish for the yen and give a little bit more risk onto the market. So that's what I'm kind of watching here at the moment. Bitcoin was quite interesting recently. It did breach this $30,000 area, $30,000 area, this $31,000 range, which was quite interesting considering the fact that that has been a sticking point for some time. We can see that obviously it's support, resistance. So, you know, now we've breached that high. Sort of the next potential high could be around about this 46,000 area, couldn't it? So maybe if we get a bit of a pullback, there could be a little bit of upside to come in Bitcoin as well. Right. I'm going to leave it there, guys. Thank you for joining me today, and really hope you enjoyed the content and enjoyed the stream. But I really appreciate all your comments and questions as usual, and I hope you have a successful trading week. I will be back with you on Thursday around the same time. It might be a little hour later, but I will obviously let you know ahead of time. But thank you for all joining me today. Really appreciate it, and I will catch you next time. Cheers, Justin. Bye.